In today's video, I'm going to give you 10 reasons why I keep pushing my margin to the max with Yieldmax, Roundhill, Defiance, and Cornerstone funds. These funds help me earn over $400,000 per year in dividends, as you can see below, and our performance and value shows that we're beating all of the indexes with our approach using margin. Cornerstone, Yieldmax, Defiance, and Roundhill funds. We're up 35% for the year. The S&P is up 22, the Nasdaq's up 23, the Dow's up 15, and the Russell's up 12. We are also down 18,000 today, but if you look above, that's in line with the indexes. We're down 1.23%, but if you look above, the Nasdaq was down 1.6. So we're right in between the Nasdaq and the S&P performance-wise, which is right where you want to be. So we're beating all of the indexes on a year-to-date basis and on a daily basis with margin, Yieldmax, Cornerstone, Defiance, and Roundhill funds, and that shouldn't be possible with all the margin that I use. Okay, I have over 592,000 in margin debt now. So you'd think with all this leverage that I'd be getting hurt on a down day like today, but we're performing in line with the indexes, living financially free out of our brokerage accounts. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So people always ask me, how many dividends do you have to earn in order to stop pushing your margin to the max? Well, I'm always going to be pushing my margin to the max, and I have 10 reasons why, and we'll get into that now. The first reason why I always push it to the max with margin and my other index funds that I told you about is because you have whale risk with Cornerstone, okay? CRF is a 5-star fund and it holds up very well on down days. Even on a down day like today, it held up very well. And you can see, by the way, that Cornerstone moves upper left to right on its chart. But here on a chart of Cornerstone, you see that, yes, on a 1-year chart, it moves upper left to right, and it's just been on a tear. It's been outperforming everything that I know of that's index related. But on a 10-year chart, it moves sideways to down. That's because you have to factor back in dividends, drips, splits, and rights offerings. If you need help planning Cornerstone properly, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement, so keep that in mind. So again, Cornerstone is a 5-star fund and it holds up very well on down days, but it has whale risk, okay? If you remember last October, we had a pretty big sell-off in closed-end funds. Here it is in 2023. We had this sell-off just like all other closed-end funds during the month of October. The market had a 10% pullback that month, and funds like Cornerstone fell pretty big because Cornerstone is a closed-end fund that can be manipulated like other closed-end funds, so you have whale risk and Cornerstone. So just because Cornerstone is doing great, I can't have it all in Cornerstone. So when I'm pushing my margin to the max, I have to diversify away from Cornerstone, away from Yieldmax and Roundhill, because I don't want any one fund to take me down. And again, Cornerstone does great, as you can see here on this chart, but when it has a whale sell its shares because premiums get too high, then you have to worry about how much margin you're using. So with Cornerstone, make sure that you're playing it properly around its rights offerings, and also make sure that you're diversifying Cornerstone with other dividend funds that are indexed. All right, so that's the first reason why I keep pushing my margin to the max. You never know what can happen with closed-end funds like Cornerstone. Even though it's my favorite fund, it's my top weighted fund, and it's 5-star for a reason, you never know, so I diversify with other funds. I mean, even though Cornerstone has a 21% dividend and it drips it down at the NAV for free gains every month, 22% gains every month with Cornerstone that we get. Even though this is one of the greatest features I've ever seen in any index fund, again, you still have to stay diversified with other indexed funds. Yieldmax and Roundhill don't drip their dividends down at the NAV like Cornerstone does, so they don't have that advantage, but they have other advantages, and that's why you have to stay diversified with all of those dividend funds. The second reason why I keep pushing my margin to the max is because you never know when a maintenance change will come. With Cornerstone, we have 30% maintenance, and with Yieldmax, we have 50% maintenance in most cases, okay? YMAG is 50% maintenance, as you can see below. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the whole secret to living financially free out of your brokerage account. For every $1 you put in your account, you get $4 of purchasing power. Everyone is granted this purchasing power to them and their brokerage accounts. I'm just using a small amount of this over $1 million in purchasing power to get ahead. All of the greats that I know of use debt to get ahead. Why should we be any different? And so my margin debt is around $592,000 right now. And this is low interest debt, by the way, because I've negotiated my rates down twice to around 6%. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. and you get my phone number for life. So I'll send you that script to negotiate rates down whenever you need it. You can also call me about anything else you have questions on in your portfolio. So if we get a maintenance change with Yieldmax, which we've already had maintenance changes before with Yieldmax, then that's going to lower our available withdrawals significantly. You have to be able to withstand over 20% corrections at all times, in my opinion, to not only live freely out of your brokerage account off these dividends, but to withstand margin calls. So when this available withdrawal gets to zero, I'll be in a margin call, but I never worry about margin calls because not only do I have a 20% cushion at all times from market drop, but I also keep my put options on in case we have a crash over 30%. So if it's 20% or below, then my dividends are going to pay back my debt, and I don't ever worry about margin calls because my leverage goes away in the span of a year. But if we have a 30% crash overnight, then my put options that I keep on would make me more money than I potentially lost in the event of that crash. If you need help insuring your portfolio like I do with put options, that's in my Volume 5 e-guide. So if you get a maintenance change and your maintenance rises, then your available withdrawal is going to fall, and this could trigger premature margin calls. This is why you want to always keep pushing it to the max, because you always want to keep growing. You grow or die with Yieldmax and Defiance dividends because they erode by the amount of their dividends. They don't really grow like Cornerstone does. That's why I keep so much money in Cornerstone, because it actually grows with the dividends. It gives you that 20% dividend, but then it grows on its chart, whereas something like a YMAG will decay on its chart, okay? It doesn't make it back to its old highs, but something like QQQ did, which is the NASDAQ. So YMAG should be following the NASDAQ, and it doesn't make it back to those old highs. So you have to be aware of that, but the maintenance change in Yieldmax would be even more deadly, okay? So if you get a maintenance change, that could trigger you prematurely, again, with a margin call. So you always want to stay in low maintenance names like Cornerstone, and you always want to keep growing so that you can withdraw out of your account even if you get a maintenance change. So that's why I'm always trying to grow my daily gains, and I'm always trying to grow my dividends, because again, you never know when there's going to be a maintenance change. You want to keep growing so that you grow your available withdrawal, and that way it never gets close to a margin call. All right, you can always go to other brokers with lower maintenance, like an Interactive Brokers or Roundhill, but they might not have the special drip for Cornerstone. So please keep that in mind. Also, you don't want to go to other brokers with lower maintenance just to use more margin, because you don't want to over leverage yourself in the event of a market crash. All right, the third reason why you have to keep pushing it to the max with margin, Yieldmax, Cornerstone, and Defiance funds is because I was mentioning earlier how Yieldmax falls by the amount of its dividends and it decays on its chart, but it also cuts its dividends in the event of a market crash. So if you think your dividends are safe right now because we're in a bull market, well, think again. In a bear market, Yieldmax is going to lower its dividends because it's going to have lower premiums. Again, Yieldmax falls by the amount of stocks, but it doesn't rise by the amount of stocks. That's why I always stay indexed with Cornerstone, because it falls by the amount of indexes, usually less than the indexes in fact, but then it rises by the amount of the indexes and makes it back to new highs. Whereas Yieldmax falls by the amount of the stocks once again, but won't make it back to the old highs, so it decays, and then its dividends will fall in a down market because its premiums will fall, but Cornerstone's dividends will stay the same because they keep their 21% dividend the same every year. They change it once a year. All right, the fourth reason why you have to keep pushing your growth to the max is because of a market crash. I know I've been saying a market crash can take you down. Of course, a market crash can take you down, but I want to keep pushing it to the max so that I have over 20% cushions from a margin call, okay? So I don't want to just have a 20% cushion. I want to, again, have a bigger cushion in the event of a market fall. One day I'd like to have a 50% cushion so that I never have any risk of a margin call. And then if we truly had a crash of over 50%, my put options would truly make me more money than we lost in that event. All right, number 5, inflation. Inflation keeps growing, okay? Even though they say inflation's going down, the cost of living always rises. It rises at an average of 2% per year. So you have to keep raising your income in order to fight inflation, all right? I don't like to keep cash on the sidelines. I like to use my margin because cash is trash. Cash is not king anymore, in my opinion. Cash is trash because you're losing to inflation. So you have to keep growing your dividends because you never know if you're going to get a dividend cut or a maintenance change or a market crash or even higher costs of living, all right? So when you're trying to live freely out of your brokerage account and you want to buy food, for example, you have to take into account inflation and cost of living. You have to keep growing your dividends or you won't be able to outpace inflation. All right, number 6, another reason why I keep pushing my margin to the max, it's grow or die, because you never never know if you're going to have a rainy day in life, all right? You don't know if you're going to have a health scare. Maybe you have a natural disaster and you lose your house in a flood. Maybe you want to help a friend out and lend him or her some money. So you never know when a rainy day will strike, and that's why I always keep growing my dividends to the max. All right, number 7, I keep pushing everything to the max because I want to have some excitement on, all right? This margin debt does not show up on a credit check to banks, so why not use this margin to get ahead? I mean, all of the greats use debt to get ahead once again, and if this doesn't show up on a credit check, then why not have some excitement in your life? I mean, we're already getting these dividends, but if you use a little bit of margin, you're going to get even more dividends, which just adds more excitement and performance to your portfolio. If you have only a little bit of margin, there's no way that that can hurt you, especially if you have low maintenance names. It's all about if you have too much margin on that's high maintenance that gets you in trouble with a margin call. Okay, number 8, I want more qualifying income for banks. So the more qualifying income, the better. When I earn these over $400,000 in dividends, it acts as qualifying income to banks for loans. That's how I really level up my account. It's with these dividends, because in order to live free out of your brokerage account and avoid a 9-to-5, you have to have a pay stub of some sort. You either have to have a pay stub from a job, or you have to have dividends act as your pay stub. Bankers won't take stock gains. They're too up and down. I had lots of stock gains before I started dividend investing. I've been investing for 20 years, and the first half of my investing career, I pretty much used stocks and UPRO to get all of my gains. I thought I could buy a house with those gains, but my banker would not let me. He needed qualifying income of over $300,000 for 2 years on average in order to qualify for my townhouse. So you have to have qualifying income, and the more dividends you earn, the more qualifying income you get, and this allows you to live free from a 9-to-5. Okay, number 9, why stop using margin when it doesn't show up on a credit check and there's an instant arbitrage opportunity to use this margin? If I'm getting charged 6% interest, but I'm earning 50% dividends from Yieldmax, Defiance, or 20% dividends from Cornerstone, then there's an instant arbitrage opportunity to use this margin, okay? You're at an instant profit when you're using this margin. Okay, and lastly, number 10, using margin actually lowers your risk up until a certain point, because it actually lowers your cost basis faster. If you're getting 50% dividends from something like Defiance, and then you use some margin and you're getting 50% dividends off of the margin, you're not only increasing your income, but you're lowering your risk because you're cash flowing your investment faster. You're reaching a break even faster with margin. The trick is not to use too much margin once again, because if you use too much, then you over leverage yourself and you risk yourself with a margin call. But if you use smaller amounts of margin with low maintenance on conservative index plays that actually have really high dividends like Cornerstone, Yieldmax, Defiance, and Roundhill, then again, you're going to cash flow even quicker using this margin. Just don't use too much margin, play by the rules. I also sell these options right here, by the way, to lower my risk and lower my margin. So this is kind of a separate subject, but I don't just buy Yieldmax outright. I sell these options on, let's say, Yieldmax and Defiance to not only lower my risk, but lower my margin. Because when you sell options like these, leap options, you get higher premiums, which then lower your cost basis even more than short-term options, and they help you outperform on down days. As you can see here, we're actually up in some of these options that we sell because they're leaps, so they actually lower your volatility and they lower your margin in the process. If you need help selling options like I do, that's in my Volume 6 e-guide. Okay, keep in mind that with all these funds, Yieldmax, Roundhill, Defiance, and Cornerstone, you're gonna cash flow, you're gonna outperform with them, but can you stand the pain up front from a market crash? Because these funds erode, like I've been saying 1,000 times. That's why I'm always preaching low maintenance names that are indexed, especially with funds like Cornerstone that are highly rated. They've been around since the 80s and they're a 5-star fund. So if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep this in mind. At Discord, this is where we alert you of the Cornerstone rights offering announcement. And again, for the 10 reasons listed in this video, that's why I push my margin and growth plans to the max. All right, if you like the video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.